The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
Good afternoon. What a beautiful Friday, May 11th, already 88 degrees at the headquarters for technical trading and investing, TFNN. And it is a wonderful Eat What You Want Day, National Eat What You Want Day. I guess the rest of the year you can't eat what you want. And my only question is your future in competitive eating if you do. Well, you'll never know, but kind of an interesting day. What do we have going on out there? It is a big day. Of course, nonstop, all you can talk about J.P. Morgan yesterday. Yesterday, someone always knows something, and with about 10 times, I think normally there's 100 or so puts, or 1,000 puts traded normally in this expiration cycle, and my understanding was there were 10,000 of them bought yesterday, driving J.P. Morgan to actually come out with the news because it had leaked. If you hadn't heard about it, basically they're taking a little $2 billion loss on one of their trades. It is kind of interesting to think that they could lose $2 billion on a trade, but one of the books I recommend, if you really want to understand how a lot of these bigger broker-dealers operate, is not that much different from a company that went extremely and colorfully bust called Long-Term Capital Management. There's a couple of books that really clue you into the thought about when people think that they're just too smart for the market. And Paving Wall Street, there's a couple other ones that are in that vein. If you just do Amazon Long-Term Capital Management, you'll find 3 or 4 books, Paving Wall Street. There's several of them that all pop up in there. I read all 4 of them because it was so interesting to see, and there were little glimmers of what algorithms they were using. But when it all comes out, what we're going to find out about, if we do ever find out about J.P. Morgan's trade, is this. They are betting on a strong one and actually hedging with a weak one. And from Long-Term Capital Management's bond fiasco or J.P. Morgan's fiasco yesterday, all bet a much smaller size. The thought that you are actually hedging something by buying something else that's weaker and owning the strong one eventually comes to bite you in the rear end. And Jamie Dimon is pretty much learning that, getting regularly castigated yesterday. The problem with these positions that they got in is it's not, they have to get in so large that if they're wrong, there's no easy way to get out. And also, normally the street will come after you and make it 10 times worse. It's kind of like if you got a bunch of guys together and one guy falls off. It kind of reminds me of riding dirt bikes out in the sand. If anybody would fall off, the first thing we do is circle them and continually bombard them with huge ribbons of sand from the rear tire of our motorcycles until they got up. There was we weren't cutting them any slack. If you got down, the idea was to make sure that the people got up and in a hurry. No extra cutting anybody any slack. And that's basically the street or a bunch of sharks, and if they smell blood in the water, they're coming after you. And to some extent, apparently this was known for a couple of weeks, although several people in the media said they knew about it, never reported it, which I find kind of interesting. No use letting us rubes know about it too soon, I guess. Of course, everybody's talking about the Volcker rule, and new politicians are coming out. The regulators are saying that they're going to look at it. A lot of hang-wringing. The problem comes in is the definition of what is a prop trade and what is not for these broker-dealer banks. And it is very tough to come up with a definition of it that actually works. In the famous case in the Supreme Court, the judge says, I can't tell you what pornography is, but I know it if I see it. And that's exactly what the problem with these prop trades is, that regulators still, and in fact, Congress punted on the whole Volcker rule and just said, we don't know what it is. You regulators tell us what it is. So, we've gone, another year down the road and still don't have a definition of what these prop trades are and how they get reported. Transparency would be probably the best medication for this not having again, and would probably help out traders too, not to go out there and swing for the fences every day. It does become somewhat problematic, though. These broker-dealers and banks, investment banks, are always trying to get a huge payback to make their numbers and make their stock go up. And they're always chasing the dream out there. S&P's down 1 point, not a big deal. We're right in the middle of the range, 1250 being pretty much support. 1350 being pretty much support, 1265 being resistance, and light volume both up and down. And we're going into a week that's going to be 80% historically higher than Wednesday's low. Probably not a big deal. We could go down, 16 points, but just not a whole lot there. We just have a very light market. Volume 2.8 billion shares so far today, and for the range we've had out here, and I guess if you were actually bearish, what you don't want is this thing to close lower on lighter volume today. And if you're bearish, you'd like to close up on lighter volume generally. But going into expiration week, I have probably a fairly decent chance of it going flat. We've had a lot of stocks that I've been watching get many little slams, slam down, slam down, slam down. And, by the end of the day, they've all recovered again. If you looked at them at 11 o'clock, you'd swear that they were cracking. By 3 o'clock, you'd say, I want to buy it yet again. There's probably a little weaker bias out here, but it's kind of hard to believe that we've gotten this incredible raft of bad news and the market still has not been able to crack. I suspect that there's a reason, and that is that the market's too short to actually go down. I kind of experienced this today with gridlock coming to work. You were stuck at every traffic light. There's no way to get any momentum going. Of course, everybody's out there slowing everything down, letting other people in traffic. And, of course, the next 10 people behind them had to wait for an entire traffic light so one guy could let a guy out of McDonald's or something. And why it's sweet, one guy gets ahead and you made 10 people wait. I don't think that we've got kind of a gridlock equivalent in the market right now. And my guess is that when we see the short interest for the market today, it's going to be astronomical based on the huge put-call ratio that we had coming in on Tuesday. Normally when people come in and buy puts for Armageddon, that's generally a low in the market, at least through expiration week. So we'll have to continue to watch that. One of the other things, we've been watching crude, and let me see if I've got a current quote on it. Down $1.30, $95.78. About 2-3 months ago, I was talking about the Habashan Fujari oil pipeline. I think I pronounced it right. This goes across the Strait of Hormuz. I said that in about 3 months it would be complete. It is complete as of today. It is being tested and loaded with oil. They think that they're going to have full production by the couple of first weeks of August, if not sooner. It's already 3 months ahead of time. They were thinking about the November. But what this does is effectively neuter Iran's call to close the the Strait of Hormuz. Yeah, they can do it, but in a couple of months, it won't matter at all. They'll be able to shove all the oil that comes out across the Strait of Hormuz from Oman with, the only choice at this point would be Iran physically attacking Oman across the straits. And it's kind of hard for me to actually see that. And two, normally it's hard to bust up something that's hundreds of miles long. So you bust up 10 feet of it or 20 feet or 50 feet of it. They come in, drop in 4 new sections, weld them up, and the pipeline's working again. It's kind of like a railroad. You could derail one train, but it's, they just put another train on there and it goes. I guess you can be a giant pain in the rear end, but without Iran actually attacking Oman, the checkmate that Iran has always had against what is it? A third of all oil flows through exported oil flows through that Strait of Hormuz. So it is a absolutely huge issue, but Iran's going to be losing a major part. I think the total expense was about $3.3 billion to build this pipeline. I think it's 42 inches, but they'll be able to move all the oil if it was ever an issue across without having to worry about Iran sticking their dirty little noses in the deal, but effectively neutering a lot of Iran's political influence in the area and threats. What do we got? June, July, August. 10 weeks for them to start something, and even if they did, it would only last a short while. The question is whether or not they'd push a bad situation and make it worse. Who knows? There is a nice map if you are watching Tiger TV, and maybe in the den, but it probably doesn't look that good in 8-bit video. But here's a Google Earth map and showing the strait, and that's normally what everybody does. But for the most part, you can see the way that they're going to bring it back down around to this bay, and I don't think that this little mark moves all the way around, but they're going to put it in this bay I'm pointing my mouse at right now, and basically allow anybody to ship oil across, and actually those little bays where they can the ships can pull up are supposed to be ready either the first or second week of July. So everybody's learned to flinch every time Iran yells or screams, but those days are getting over fairly quickly. NVIDIA came out with news last night, earnings. They were up about $1 earlier. I haven't looked at them before. Better than expected first quarter sales before the market opened. My opinion about NVIDIA, a little bit when we come back.
That time of year again, and the Great Panther Silver giveaway is every day in June. Monday through Friday, we'll be giving away a Great Panther Silver 1 ounce silver bar. And all you have to do to enter is visit the front page of TFNN.com and fill out your Great Panther Silver and wishing you a great start to the summer. Sign up today to have a chance to win a 1 ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and major stock indices when telling the market when to be out and when to be using. By using blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakouts gains. Go to TFNN.com today. Click investment newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, market ticking down just a little off 2 points, almost 3 on the S&P. Again, no volume up, no volume down. Good way to chop a lot of traders out there that get a little too frisky. If you watched it, maybe played the bounce in the morning, you got it up. But really not that much of movement out here to really speak of. A little bit, maybe a few points. It's kind of the same thing every day. We get a lot of shorts coming in late in the day, or a few people selling, and a lot of people pushing it down in the morning and then buying as soon as 11 o'clock turns around. NVIDIA did come out with their numbers last night. In fact, I probably ought to check and get a quote on NVIDIA. And what do we have? $13.25, up a little, 6.5%. NVIDIA is the only free agent out here in graphics chip makers. They do have their own line of processors, but to this point, they really haven't ever made the kind of inroads that they needed to become something like ARM's Holdings or some of the other companies out there, both building graphics chips and processors. now that they've actually starting to come in one chip, both the processor and the graphics processor. NVIDIA continually sees themselves more marginalized as the time goes by. Both AMD and other processor companies out there continually putting their stuff in one particular integrated chip. Of course, saves a lot of room, saves a lot of power, saves a lot of wiring, saves a lot of cost. NVIDIA, my guess is one day will be bought out by somebody else, but the problem is they have so much money themselves. I forget what they have. They got $5 or $6 billion sitting in the bank. So they've got plenty of cash. They're not going out of business anytime soon, but at the same time, they don't have a processor company to dance with. Ideally, they and Arms Holding would get together, but I think neither company, after this time, really wants to give up what they have. Arms Holding likes their business, which is build nothing and sell everything on royalties for designs. NVIDIA does build their stuff, but in fabulous design. They don't own any manufacturing capability themselves that I'm aware of. So NVIDIA is always going to be kind of blowing up and down at the whims of the market. Maybe somewhere as high as $17, $18 it could trade, down to something like $12. Cisco came out and dropped a Baby Ruth in the punch bowl the other night before Jamie Dimon, Wednesday night. Microsoft did come out, and they are actually doing fairly well, or were, MSFT. Check them out real quick. Almost up 2%. A nice little bounce for Microsoft, which sat dormant forever. Finally got out of that trading range, is moving. Microsoft words last night to the investment community were extremely bullish. They basically are saying that whatever problem there is in selling stuff must be a Cisco thing. Cisco doesn't talk for the entire industry, and we haven't seen any weakness. In fact, we've got nothing but strength. Microsoft actually said their business units are doing extremely well, even in Europe. So is this a tale of Cisco? Microsoft says no. Microsoft says yes, that it's not an industry-wide thing. It's a Cisco thing. So I don't know. Lately, I'm probably more inclined to believe Microsoft than the CEO of Cisco, who has worked out a permanent siphon to put money in his pocket and not do much with the company itself. My Blowhard of the Month award goes to Stephen Ratner. Yesterday, the ex-car czar showed the contempt that most, or a lot, of smart people have for others, in that, and if you're not a professional, you shouldn't be investing in individual stocks. He said he wouldn't fix his own car. I fixed mine. I changed my own oil. I changed actually a swing arm and a ball joint last year. Not that big a deal if you know what you're doing, and actually if you pick up a book, most of them will tell you exactly how to do it if you just care about it. But he said he wouldn't fix his electrical wiring in his house. I put in my own switches. Is it really that big a deal? I don't know. I just thought he was a knob for saying it. And, of course, he's responsible for the Cars for Clunkers deal, so I don't think much of him anyway. Anyway, Blowhard of the Month, Stephen Ratner. We'll be back in a minute.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
And as we continue on Eat What You Want Day, you can always give me a ring at 877-927-6648. We're going to get to some market commentary as soon as I get some things fixed back up here, and look at some stocks that hopefully are giving some nice indications. There's first one I want to start off with today is Eagle Rock Partners. Everybody's been watching natural gas out here. Kind of a nice trader. I actually own this one. I'm going to go back and look at this one a long time ago. Maybe go back and see. I can say this thing actually does make some decent signals. And here's where I bought it. Yep, that was it. This thing made a beautiful signal. Came down on heavy volume May 14th, 2009. Hit $2.94, 610,000 shares. Came back in with 300,000 shares. And I bought this thing and wrote it up. Nice move up here, and I think I sold it at about $4.50. I remember owning it at that time. I just wish I would have held it for a lot longer. The stock's making some fairly decent signals out here. But certainly this one does make some nice signals. It may base out here for a little while longer, making a nice little hammer, inverted hammer here today for us. The April 11th low of this year, 650,000 shares, came in with it just a little bit more volume than I was hoping for, 460,000 shares, still a lot lighter. Needs to close over that $9 mark, and what are we going to get here today? Probably going to get something like that. Probably going to have about 500,000 shares by the end of the day. But for all those people looking at natural gas out here, it's kind of interesting chart. Natural gas up 2 cents today at $2.50. I still suspect we're going to have a month or 6 weeks of weakness in natural gas. And at that point, probably somewhere around the 1st of August, natural gas probably setting up for some decent moves. But pretty much the pipelines are still full from everything I hear. But probably going to set up a nice winter with a lot of these electric utilities switching over to natural gas. Probably go from a surplus to a deficit fairly quickly in the natural gas market, and I think a lot of other traders are looking at the same thing. In fact, I haven't had a chance to look at it, so we'll see what's going on here. Okay. Got something flashing at me here, and I'm not exactly sure why it is. Maybe we'll figure it out later. But BAC, got something going on here. Maybe I'll have to close some of these windows. Everything's decided to lock up on me. It's never fun when the computer goes awry. And maybe I'll have to stop some of these things. Task Manager, what's going on here? Maybe I get rid of them. Okay, well, at least that helped part of it. Maybe we'll get some of this other stuff back. And see if I can get back to my charts. And we'll be right back up and running in just a second. And there we go. Okay. I wanted to look at Bank of America, see how it is responded. It was actually making some fairly decent lows into the gap. I'll see how it comes in here today. If you see that gap, it runs back to the 3rd of February where it popped up on, 364,000 shares. So far, we've come into that gap and actually filled it today. 214,000 shares, to maybe 250, 260 by the end of the day. So fairly decent support if you look at that gap. That gap actually is a multi-gap that runs back, that was never filled back in 2011. If you follow my line right across and watch on Tiger TV. So you do have a gap, a fairly decent line of support. It's broken back through that. You had some decent days in there with some decent volume, 337,000 shares. We've dipped down below it. We've gone in it. Looks like we're going to close a little higher than we closed lower on this thing. So Bank of America, actually doesn't look all that bad out here. I suspect that after all the turmoil with banks and J.P. Morgan and all the spinoff on it, really not all that bad. A pretty decent pattern. You wouldn't like it to go any lower than that, though. So let me see if I can get back to getting in my stocks. I was going to look at next pull up. Hopefully, if we're not having, I'm having internet issues, it looks like. We'll have to see. CRM's another one. Oh, there we go. CRM is a interesting chart. Let's see if we've got a got some other issues here. CRM, Salesforce.com, of course, came out with earnings last week, and everybody didn't quite like what they were talking about. Big slam down. Actually, was it yesterday? Slam down. But actually, at fairly decent support levels, it's come back, like almost everything I've seen in the marketplace, to fill yet another gap. That gap popped up on 14.5 million shares. We came back in with about 9.6 million shares yesterday, and today about 2 million shares. So, we keep hammering away at these markets trying to come up with something to actually... see if I can get some other stuff going here. Hammer away at these markets. This is kind of the pattern I see in just a ton of these stocks. Another one I've been watching is the same thing, is Broadcom. Actually not doing too bad today. Looking like it's coming to fill a lot of its gaps. It had a nice little gap that it's come back and filled over the last few days. BRCM is a symbol, of course. Competitor to Qualcomm. Some people think that maybe Qualcomm's a little overextended, that Broadcom out of these two might have a little bit more juice in it. But it popped up on the 19th of January, almost 23 million shares on that day when it busted back. It's come back, tried to test it once on the 6th of March with almost 12 million shares. Over the last few days, though, we've gotten down to try to fill that gap on 9 million shares, on 7 million shares, on another 7.5 million shares, and today on about 5 million shares, and actually turning around just a little bit on that. So we'll have to check it out here. Let me go and look at this right quick. BRCM. And I get a quick quote. 47 cents. Let's see if there's any news on it. One away, NVIDIA. Probably just bouncing on the NVIDIA news, I would imagine. NVIDIA has a lot of business in the mobile phone sector. I guess probably need to check Qualcomm at the same time and see how these actually two come together. I haven't looked at the Qualcomm. Qualcomm up 48 cents also. Probably all on that NVIDIA news. Let's take a quick look at Qualcomm at the same time. Looked like it got a little closer to filling its gap. Pattern's not all that different than everything else in the marketplace. Qualcomm actually took off on, the 2nd of February. 34 million shares came in, had a nice little test of it on May 8th, 14 million shares. So pretty nice pattern out there, 34 million shares. Just came in to touch the top of that gap on 14 million shares on the 8th, and we've been going kind of sideways here on this most of the day. Am I actually looking? Yeah, we got May 11th up there. Okay, so not bad. 3 sideways moves. You'd still probably like it to come in and fill this gap just a little bit more, but when you compare the volumes, this is what I'm seeing in a lot of the marketplace. You've got these starts, gap aways. It's coming back and either filling these gaps or even just coming close to them and going sideways. And 35 million shares to 14 million shares. Pretty good indication that people are looking at Broadcom and Qualcomm as, at least in the semi sector, some of these that are going to continue to have some decent support. Sotheby's was one I was watching. It looks like it's going to bust through its gap, but volume was probably a little bit too much today. 2 million shares. That gap up happened on 1.4 million shares. So actually one that's coming up. Even selling Scream for whatever it was, $110 million earlier in the week is not enough to actually get this thing going. So we've got plenty of time in this segment, another 5 minutes. Why don't you give me a call, 877-927-6648. That's 877-927-6648. We'll continue to watch and see how this market plays out. In fact, let me clear some stuff off my desk and see how we are closing back here on this movement. Off 2 points so far, not a big deal. We'll have to see how that continues to move along. See if I've got anything else. That looks pretty much like it. 1355.68 on the S&P, so not a whole lot. Let me see if I can refresh that just to make sure that it is correct. 1353, a little bit lower. Off 4, volume picking up 3.2 billion shares, so we are selling off with a little bit more volume as we come in here to the close. But support still lies at 1350. So we'll see. I think the last time down there was about 4.5 billion shares on the consolidated tape. So we'll have to continue to watch these and see how they tend to close out here. Let's see what else we have going on. Some stocks holding up, some not. We'll have to continue to see whether or not what kind of close we get. MCP did come out with earnings last night, one I wanted to check before we go to a lot more. Not a whole lot of movement in this low. MCP, I'll check in on them. Still, those coming across, it had the same kind of thing. It's got a low at $23.05 that it could conceivably get to. 4.9 million shares, been in it with 2.3 million shares. Today, 2.7 million shares, and pulling back. Earnings really didn't do so much with it. And we'll look. I've got my tests of a couple of days ago. We'll see how some of these that we were talking about the other day have held up. One that we were talking about was AK Steel. AKS is the symbol. Let's see if I've got, let me do one little thing here just to make sure. Again, you can call. We've got enough time for you before the end of the day at 877-927-6648. AK Steel, AKS is the symbol. Actually had kind of a nice little bounce out of here. We were talking about it on Wednesday. $6.80 on March 7th. 7.5 million shares. Got into it with a little 6 million shares. Normally, I like a little less to probably go out. May get one more retest of this area, but certainly in a steel stock, one to be looking at. And Taylor was another one. We'll check in on it. It bounced out of several gaps, having a slight little pullback. But another one of these that popped on fairly decent volume, in this case back on March 9th, popped up on 4.1 million shares. Tried to get into that, and this pattern that I'm going to show you here today is exactly what we're looking at, and that is these. I'm seeing them everywhere in the market. These little intraday pushes to the bottom that just turn around by the end of the day for the most part. You had a nice little pop back up the other way, and not much of a recourse out here. So you might see this thing try to come back into this gap one more time at 26. But certainly you look at the volume today, even though we are kind of pulling back here into the close, just not much volume in a lot of these stocks out here at the lows. So we'll have to see what Monday brings. But right now it's hard for me to be very bearish. Gold is pulling back. Anglo Gold, some of these that on a very short term, actually coming up. Doug in Atlanta is calling about NEI. How are you doing today, Doug?
Hello, David. I was going to pick your brain on some tech company, NEI.
Yep.
I wonder if you've heard of them before.
Vaguely, I haven't spent a lot of time on them. They design and manufacture application platforms and appliance solutions, kind of like a NTAP.
Yeah.
And they haven't heard a lot about them. Look at their financials real quick and see whether or not they've got anything. You want to hold through the break?
Sure.
We will. Yeah, I'm going to take a look at that. Anyway, we'll be back with him in just a second. I don't like that it did touch the December 13th low on heavier volume. Volume is kind of coming out of it here. But nice little penny stock. We'll take a look at it when we come back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Go get him, folks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back, and it's Doug from Atlanta. How you doing today, Doug?
Fantastic. Yourself?
Great. When did you? Where did you find out about this stock?
Oh, it's something that's on my long watch list. I like what I find appealing is the high volume highs, but I'm trying to figure out if this company is still going to be around in another year or so.
I was going to say I looked through during the break through the extra, and a lot of the principals have been exercising their options at like 92 cents. since March. So my guess is they don't think so. And also, the amount of money that these guys are getting paid, I don't know how long the company could last if that's their actual incomes, at least the ones I saw listed on the webpage. So I'm going to say, I can't find much about their products or how they're actually going to turn the company around or the prospects for it. It did come down on huge volume. I'm not opposed to trading something like this, but it looks to me from looking at, I think there was one in April where one of the big guys punted out a ton of options at 92 cents when the thing came down that day on heavy volume. So he wanted to keep a dime of those options, but he had to punt out a lot of stock that day, and I don't know. It just I can't find a lot about what they think that their business is going to be long term, and from the people selling options and pushing out options all the way when it was going up.
Right.
It just makes me think that these guys are probably going to start up yet another penny stock and loot it also. I just, I don't know enough about it to say that they do it all, but my guess is if I start checking these guys out, this is not going to be the first company that these guys have been in like this, and kind of a pump and dump kind of thing.
Right, I understand.
So I don't know, maybe they've got something I'm unaware of, but normally you call in with some really great ones. This one kind of makes me nervous.
Yeah, it was on my high-risk side, but the reward, if it ever would come to fruition, it seems appealing, but I'd probably sidestep it, seeing it's so much of a high risk.
Yeah, I mean, a lot of these network stocks are getting kind of hammered on Cisco's discussions, but it's just not, for me, it just, I don't know. I don't think Cisco's right. I think that they have a problem that's larger than that it doesn't have anything to do with Europe. I have a feeling it has to do with they're still asking almost $5,000 for their premier router when Lucent Alcatel is selling theirs for $2,800. So I think that their discussion that Europe's weak has more to do with they haven't brought the price of their routers down to reflect reality. And so a lot of these companies are just they're hammering them out there. And and when Microsoft comes along and says that there is no real problem, that we're seeing brisk business in Europe, I'm trying to figure out who the real story is on these. But I think Cisco's kind of put the taint on all these networkers here for a few days. But most of them are not saying that business is that weak.
I tend to think that Cisco is going to price themselves right out of the market, which is kind of interesting.
They've got the same problem. They got the same problem that Apple did. Apple in about 1988 had some big discussions on whether or not they were going to license the operating system and let other people build the hardware. And the problem was that no one could ever get to the point where saying, okay, we'll take the hit in the stock temporarily for the long term. And I think that's Cisco's problem. If they drop prices on them, they're going to go back to $12 for a little while.
Right.
And they're more than willing to continue sucking at their big CEO pay for a while. Anyway, I see Tom and Steve in the bullpen getting ready to go. See you later.
Great Basin Gold is a mining company engaged